Hello everyone. Today we are going to discuss about residential status or basis of charge, or we can say the tax liability as per the basis of residential status. In this chapter, we will discuss about the introduction of the residential status, importance of residential status, different categories of residential status, and rules of determining residential status. Also, we will discuss about the incidence of tax or tax calculation on the basis of residential status. After studying this unit, you should be able to identify categories of assessee on the basis of residential status, determine the residential status of assessee, and determining the tax liability. As you are aware that Income Tax Act revolves around assessee and his income. In the previous units, you have familiarized with concepts such as assessee, previous year, assessment year, total income, etc., which are foundations of income tax. However, to determine tax liability of an assessee, it is essential to know his residential status. In this unit, we intend to explain the method of applying the rules regarding residential status and thereby determining the scope of total income of the assessee. So let's start with the unit. So tax is levied on total income of assessee, as we all know. Under the provision of Income Tax Act 1961, the total income of each person is based upon his residential status. Section 6 of the Act decides or divides the assessable persons into three categories. First, ordinary resident. Second, resident but not ordinary resident. Third, non-resident. Moving further, what is residential status or meaning of residential status? Basically, residential status is a term defined under Income Tax Act, has nothing to do with nationality or domicile of a person. An Indian who is a citizen of India can be non-resident for income tax purposes, whereas an American who is citizen of America can be resident of India for income tax purposes. Residential status of a person depends upon the territorial connections of the person with this country, that is, for how many days he has physically stayed in India. According to Section 4 of the Income Tax Act 1961, tax is to be charged on the income of the previous year of a person at the rate fixed for the assessment year immediately following the previous year by the Annual Finance Act passed by Parliament in February every year. The tax liability of a person is determined based on his residence in India in the previous year. The residential status of an assessee may not necessarily be the same in each year. He may be a resident in one year and non-resident in the next year. As such, clear identification of residential status is necessary. It is important to note, however, that the status of an assessee will be the same for all sources of income. The rules for determining the residential status are not the same for different types of assessees like individual, HUF, firm, and a company, etc. Moving further, some important points to be taken into consideration while deciding the residential status. Residential status in a previous year, duty of assessee, dual residential status is possible, same residential status for all sources of income. Moving further, categories of residential status. Residential status are divided into three types: resident and ordinary resident, not ordinary resident, non-resident. Based on residence, the individuals and HUF entities are divided into three categories: person who are ordinarily resident in India, person who are ordinarily resident in India, person who are non-resident in India. Rules for determining the residential status. For there are two basic conditions and two additional conditions. So basic conditions are: the assessee is in India during the previous year for a period of 182 days or more. The assessee is in India during the previous year for a period of 60 days or more and has been in India for a period of 365 days or more during the 4 years preceding the previous year. So, if we have to decide the residential status, then first we will have to look into the fulfilling of basic conditions. There are two basic conditions. One is person has to be in India around 182 days or more. Another is period of 60 days or more, has been in India for a period of 365 days or more during the 4 years preceding the previous year. There are some additional conditions which have to be fulfilled. The assessee has been resident in India in at least 2 out of 10 years preceding the previous year, and the assessee has been in India for a period of 730 days or more during 7 preceding the previous year. Residential status, resident and ordinary resident. If assessee satisfy any one of the basic condition and both the additional condition, it will be treated as resident or ordinary resident. So we can say resident and ordinary resident can be defined on the basis of the conditions fulfilled by the person. As mentioned here, any one of the basic condition need to be fulfilled in case of resident ordinary resident and both the additional conditions. Second, not ordinarily resident, assessee satisfying any one of the basic condition but not satisfying both the additional conditions. So if we have to judge the status of a person and if one basic condition is fulfilling and one of the additional condition is fulfilling or not the any additional condition, then the person is said to be not ordinary resident. Third category is non-resident. Assessee satisfying none of the basic conditions will be treated as non-resident. Moving further, now with the help of this example, we will understand that how the residential status is being calculated. Mr. Anil, citizen of Spain, has been staying in India since 1985. He leaves India on 16 July 2022 on a visit to USA and returns on 4 January 2023. Determine his residential status for the purpose of previous year 2022 23. So we will now see the solution. If Mr. Anil satisfy first condition, stay in India for at least 182 days, his stay in India during the previous year, 1st April 2022 to 31st March 2023 is as under. April all 30 days, May all 31 days, June 30 days, July 16 days, August nil, September nil, October nil, November nil, December nil, January 28 days, February 28 days, March 31 days. Thus, his total stay in India during the previous year is 194 days. As he is in India for more than 182 days during the relevant previous year, he satisfies the first condition and is therefore a resident. Hope you all will understand this and you are able to get the clarity about the residential status and its calculation. Moving further, there are some exceptions to these rules which we have studied in the previous slide. Exceptions are mentioned in section 6, subsection 1a. In the following cases, an individual is deemed to be resident but not ordinary resident even if he does not satisfy the two basic conditions. First, an individual is deemed to be resident but not ordinary resident if he satisfies the following three conditions. So, if any of the conditions mentioned here is satisfied, then individual is deemed to be resident but not ordinary resident. First condition, he is an Indian citizen and not a foreign citizen even though he may be a person of Indian origin. Second, his total income during the previous year excluding income from foreign sources is more than 15 lakh. He is not liable to be taxed in any other country. Moving further, an individual is deemed to be resident but not ordinary resident if he satisfies the following four conditions. He is an Indian citizen or a person of Indian origin. His total taxable income during the previous year, excluding income from foreign sources, is more than 15 lakh, he is not liable to be taxed and he comes to visit India on a visit during relevant previous year. Fourth, he is in India for more than equal to 120 days but less than 182 days during the relevant previous year and more than equal to 365 days for 4 years immediately preceding the previous year. Moving ahead, how will we calculate the residential status in case of HUF? So, the residential status of an HUF depends on two factors: the location of control and management of its affairs and residential status of its. So for deciding the residential status of HUF, we will see the location of control and management of its affairs and the residential status of its karta. So talking about ordinary resident, HUF is said to be ordinary resident in India in any previous year if the control and management of its affairs is wholly or partly situated in India during the previous year. The expression control and management signifies controlling and directive power. In other words, it means the head and brain. Moreover, the control and management should be in effect and not merely the right or power to control and manage. Next, if its manager, Karta, satisfies the following condition of section 66A. Its manager has been resident in India in 2 out of 10 previous years and its manager has during the 7 years preceding the year been in India for period amounting in all to 730 days, or for the purpose of calculating the period of manager's stay in India we shall add up the stay in India of all successive managers of the family in case of death of the first manager. Moving ahead, not ordinary resident. HUF is said to be not ordinary resident if control and management of its affairs is situated wholly or partly in India during the previous year, but its manager does not satisfy the additional conditions of Section 66A. Case of non-resident. A HUF is said to be non-resident in such cases only where its control and management are situated outside India during the previous year. However, control and management is situated partly in India and the Karta satisfies the condition of Part 2, Section 66, it becomes a resident in India. Now, we will talk about the firms and other association of persons, section 6, subsection 2. So, till now we have studied about the individual, HUF, and now we are going to study about the firms and association of person. So, firms and other association of person can fall under two categories only. They may either be resident or non-resident. The category of non-ordinary resident does not apply to such assessee. So, case of resident, according to section 6, subsection 2, a firm or other association of person is said to be resident in India in any previous year where during the year the control and management of its affairs is partially or wholly situated in India. The residential status of its partners in India is immaterial. Now, case of non-resident, a firm or association of person is said to be non-resident where the control and management of its affairs is situated wholly outside India during the previous year. Moving further, residential status of a company, section 6, subsection 3. A company is said to be resident in India in a previous year if it is an Indian company or the company is foreign company, its place of effective management in that year is in India. A company is said to be non-resident in any previous year if it is not an Indian company and its place of effective management in that year is not in India. Place of effective management means where key management and commercial decisions that are necessary to conduct business of an entity are in substance made. Hope you all have understood that how the residential status of an individual, HUF, firms and association of persons, and a company are decided on the basis of rules mentioned here. Now, moving further, we will talk about incidence of tax or scope of total income on the basis of residence status. As you are seeing in the chart that one category is income type is mentioned and one category is residential status is mentioned, and five types of incomes are mentioned here. So basically, this chart shows that the type of income and its treatment if the person is resident and ordinary resident, if the person is resident but not ordinary resident, and third category is non-resident. So first income is income received or deemed to be received in India, whether earned in India or elsewhere. If any income which is received or deemed to be received in India, either it is earned in India or earned somewhere else, then in all the three categories, this income will be taxable. Second category, income which accrues or arise or is deemed to accrue or arise in India during the previous year, whether received in India or elsewhere. It is also taxable in each of the residential status. Third income, income which accrues or arise outside India and received outside India from a business controlled from India is to be taxable under resident and ordinary resident and non-ordinary resident. This income is not taxable in case of non-residents. Now, fourth income, income which accrues or arises outside India and received outside India in the previous year from any other source is only taxable in case of resident and ordinary resident and not taxable in other two residential status, that is not ordinary resident and non-resident. Now fifth category of income is income which accrues or arises outside India and received outside India during the years preceding the previous year and remitted to India during the previous year. Such income is not taxable in any of the residential status. So hope you understood the types of income and its taxability under various residential status. So let's sum up this unit with a short summary. The tax liability of a person is based on his incidence in India in the previous year. On the basis of residence, the person are divided into three categories, namely resident, not ordinary resident, non-resident. Further, these categories divided into four groups, namely individual, non-company, company, and any other person. Five types of income have been mentioned for the purpose of tax liability. Income received in India, income deemed to be received in India, income accruing or arising in India, income deemed to accrue or arise in India, income accrued and received outside India. Tax incidence on a taxpayer in India depends upon his residential status, whether an income earned by an individual in or outside India is taxable in India depends on the residential status of the individual rather than on its citizenship. That's why we have studied the various rules and regulations to judge the residential status, not the citizenship. A resident and ordinary resident is subject to tax on his global income in India. Resident and non-ordinary resident and non-residents are generally subject to tax in India only in respect of India's source income, that is, income received, accruing, or arising in India or deemed to be received, accrued, or arise in India. Hope you understood this unit and able to judge the various portions of the tax liabilities, and the tax calculations on the basis of category of residential status, and you will understand the rules and determining the residential status. Thanks. Have a good day.